Okay. So, hi guys, am I audible? Hello. Hello. Okay. I guess there's an issue with the screen dimensions which are visible on the screen. Okay. So, hi everyone. I guess I hope I'm audible and there's not too much wind noise or anything around. So, hi everyone. I guess okay. So I think we are good to go now. Let's just get started now, yeah. So hi guys, I welcome you all to the Real World Assets live session with Quill Academy. So first of all, I'll start my introduction. My name is Prathmesh Ranjan, and I'm currently working as a Web3 security researcher at QuillAudits. So one of the tasks when I initially started out with blockchain and all, I was everything was very on chain, right? So a lot of the things and all of the properties and all of the things which we always talked about in blockchain were always things which were something which is online and on chain. So a few time back when I heard about this, the whole process of tokenization of real world assets, and that new projects are being released where people are taking off chain things and they're converting them into on chain assets. So that was quite a very interesting thing for me, and I researched more into it. And upon my research, I came across a lot of information which I thought was could be very influential, could be very important, and could be very mind opening for anyone who's working in the Web3 industry right now. So I just compiled all of it into a single repository, and here it is in front of you. So before starting out with the whole theoretical part and everything, I would like to mention that we would be having around 2 to 3 live sessions. So this is the first one of the series where we'll be going through all the theoretical aspects of real world assets. So we'll go from the types of RWAs to the key components and the considerations, and then we have the categorization of RWAs. Well, this is something which is very interesting, and I guess it would be very fun to discuss with you all you guys, because we have a lot of possible categories of RWAs based depending upon their different properties, which we'll go through later in the session. And other than that, we'll also be going through the different categories and how they are implemented, what are the live examples right now, what are the live projects which are flourishing in the RWA ecosystem right now, and we'll go through all these examples in all three categories. And in the next live session, what we'll be doing is that we will be going through a practical application of how we can actually write a smart contract which can use oracles and real-time data feeds and all to tokenize an Apple share. So we'll tokenize an Apple, we'll make a token, we'll make a ERC20 token which will be pegged one to one with the value of the Apple share in the US stock market. So what we'll do is that we'll create a token, an ERC20 token, and it will represent a single token will represent a single Apple share, and thereafter we'll look into the various functionalities of that token, how can be implemented, what are the different functions which we need to make, and how do we use the oracles to maintain the price values of the tokens and everything, how do we maintain the collateralization and everything. So we'll go through all of the details, and we'll also be covering the security aspects. We'll also be writing tests for the smart contract as well, so we'll save that for the next session. So for now, let us directly jump into real world assets. So yeah, so what are real world assets? Well, real world assets could be anything which you see around you. So for example, this is my phone and this is a real world asset, and I have a tape with me which is a real world asset, and let me see, yeah, I have a face wash with me which is also a real world asset. So anything you can take, actually anything which is visible to you from your naked eyes, and you can convert it into a real world asset. Well, it's not as simple as that. You need to have a lot of governance mechanisms, and a lot of the supply chain should be very very sorted. But yeah, you can take anything, like anything which we see around us can be tokenized, and it can be created on the chain, it can be represented on the chain. So yeah, let's start with real world assets. So this repository serves as a resource hub for developers, enthusiasts, and researchers interested in exploring, developing, and understanding RWAs on the blockchain. Here you will find code examples, smart contract templates, technical guides, and relevant resources to help you navigate the exciting world of RWAs. So let's understand real world assets. So we did understand what are real world assets. Now let's look at their implementation in the blockchain. So tokenized real world assets are blockchain based digital tokens that represent physical and traditional financial assets such as cash, commodities, equities, bonds, credit, artwork, and intellectual property. Well, it could be anything ranging from actual physical cash, or from ranging to artwork like the paintings of Mona Lisa and the paintings of Van Gogh, and to any intellectual property which any individual has created in the physical world. So the tokenization of RWAs marks a significant shift in how these assets can be accessed, exchanged, managed, unlocking an era of new opportunities for both blockchain-powered financial services and a wide variety of non-financial use cases. Right. So now let's look at the types of RWAs. Well, there are a lot of types of RWAs which are right now being utilized to bring on chain. But let us look at the more major and the most prominent ones. So let us start with real estate. So this includes residential, commercial, and industrial properties. Real estate tokenization allows investors to own fractional shares of properties, providing liquidity and diversification. So what do we mean by fractional share? So I'll just give a brief explanation for it. So let's just say you go in the physical world, let's talk about in the real world. Let's just say your parents tell you to go and search for a house. We need to buy a new house because we need to shift. Yeah. So you go around different houses and all of the houses in your locality which you want to stay are very big and very huge houses which you do not require, which are ideal for a family of 7 to 8, but you are just a family of 3. So here you come under the dilemma that you obviously don't have that much money, that much budget. You also do not want the whole of the house for yourself because you guys are only 3 people, and the house is made for 8 people. So here comes the functionality, and here comes the benefits of the fractional shares. So if we tokenize a real estate asset, like if we list a house and we tokenize it and we bring it on chain, so as you know that on chain properties, they can be bought fractionally. So when you go on to buy Bitcoin, you obviously do not have to buy one Bitcoin. You can buy 0.000, and you can buy any fractional share of Bitcoin in any amount. It does not have to be a quantifiable number, right? So the same thing applies when a real world asset is tokenized on chain. It does not require us to buy it completely a whole world, like we can. It is not compliant that we have to compulsory that we have to buy a whole one real world asset, a whole real estate house. So here where it comes to play that we can only buy the fractional amount of the real estate which we want for our need. So here where it comes to like this is one of the main advantages of bringing it on chain. And other than that, obviously we have the options of providing liquidity and different properties and diversification. So I would like you guys to see one of the real estate real world project. So I I had come across an article where they had listed a lot of financial real world assets. Let me just see if it is this one. Okay. Yeah. So Polymesh is the one. So if you guys have already not heard about Polymesh, it is a really interesting and a really intriguing project. Uh, which if I think if you have the time, I think you should definitely go through them and you should read the white paper. So this is a institutional grade permission blockchain built specifically for regulated assets. So if we talk about real estate or any real world assets, this is a great project which tries to and which provides a platform to bringing real world assets onto the blockchain, and they have their own native blockchain which is Polymesh itself. So I would encourage you guys to go through it once and to read through the white paper and what are the features and how are they implementing the things. So this would be a good read for the future. And coming back to the types again, then we have commodities, which are physical commodities such as precious metals, uh, gold, silver, agricultural products like grains, coffee, energy resources, oil, natural gas. So, one very prominent project in this commodity section is the PAXG, which is the Paxos Global Gold. Yeah. So Pax Gold or Paxos is a RWA project which is tokenizing gold, off-chain gold like the real gold. So what they do is that they are creating a digital token backed by physical gold. So it does not mean that they are just creating digital tokens of gold out of thin air. No, they actually have the backing. They have actually have the collateralization of all the tokens which they are producing, and they have the collateral in the form of physical gold which is stored in their safe wherever the company is based. Okay, it is mentioned there, I guess. Way to own investment grade physical gold with all the benefits of the blockchain. Each PAX gold token is backed by 1 troy ounce of gold stored in LBMA vaults in London. Yeah, so you heard it. So each PAX gold token is backed by a single troy ounce of gold which is stored in the vaults in London. So this is also another very prominent and very interesting real world asset project which is very prominent right now. So this is also a read for the future which you guys must go through. uh, Coming back to art and collective, so coming back to the other types, so there we have art and collectibles, we have intellectual properties like copyrights, trademarks, other form, like generally the process of copywriting and the process of trademarking is a hassle. Anyone who has gone through this whole process knows that this is a hassle. So if we bring that whole lot of paperwork thing and everything onto on-chain things, so we just need a smart contract, we just need a digital signature, we can sign it and our work is done. So yeah, this would save people a lot of the energy and a lot of the time if such things are brought on chain. So then we have equities like equity and securities like shares of private companies, stocks, bonds, and other financial instruments. can be tokenized to increase liquidity, streamline transactions, and enable global access to capital markets. So right, uh, if you remember, I just told about the Apple share, about the project or about the smart contract which we will be writing in the next session, which is exactly based on the same type of RWA, which is equities and securities. And there's one very important feature or very important mention here, that it will enable global access to capital markets. Now, let's just take my example. So, my name is Prathmesh, and I'm living in India right now, in a town in a city in India. So right now, if I want to invest in the US stock market shares in the companies which are based in the US stock market, I cannot. Well, now right now there are some companies or some uh, financial companies which are bringing the US stock market shares to India, but they charge a lot of fees along with that, and yeah, so that is the case. So if we tokenize all the Apple shares, like if we tokenize all the US stock market shares, and we make a real world asset marketplace for all the equities and all the securities, so what we can do is that anyone from India, anyone from Pakistan, anyone from Nepal, anyone from from South Africa or from Kenya, from anyone from any part of the world who has access to the internet can have an access to the equities of the stock market of US. So this is a very I would say a very big and a very huge step if this is taken, and I guess and I hope in the near future we'll see a project which is actually doing this. So then we have revenue generating contracts, we have deeds and titles, then we have carbon credits. Yeah. So there is also one more project which I'd like you guys to go through. Uh, I'm not exactly remembering the name, but there was a blockchain which was tokenizing carbon credits on chain for the company. So this is a white paper for, okay. Okay, not sure what is the project, but you guys can go through how we are tokenizing carbon credits on chain. So this is also a very intriguing and interesting read for the people. So as we are done with the carbon credits, then we have the luxury assets. So high value luxury items such as yachts, private jets, luxury watches, as I said, anything which we see around us can be tokenized. So such things can also be tokenized and brought on chain. So instead of going through the third party, like instead of going to the second hand markets like OLX or Quicker or something like that, we can list our pre-owned articles and then pre-owned luxury items onto on-chain assets, and then we can list them on a decentralized marketplace where people can come and buy the assets. So now let us look at the key components and considerations in RWAs. Let me just check once if the live session and everything is going correctly. Yeah, so it is going great. Yeah. So now we have the key components and considerations in real world assets. So let us look at the three dimensions. First, we have the real world assets themselves, which are the bonds, commodities, currency. It could be anything, right? Then we have the tokenized real world assets, tokenized on a blockchain and verified by chain link proof of reserve. I'll come back to that. And we have then RWs and DeFi, which are tradable across DeFi for deeper liquidity, faster settlement. So we have the real world assets, we tokenize them, and then they are brought to the DeFi market. So this is the whole process of taking it. I take this phone, I build a smart contract, and I write governance protocols and how to maintain the collateralization. So that is how I tokenize it, and then that tokenized real world asset, that token is brought to DeFi platforms, which will then be available for trading, for liquidity, and for all the settlements and all. So there's an important line which is written here, by chainlink proof of reserve. So let us directly go to the chainlink proof of reserve website. So Chainlink proof of reserve enables reliable and timely monitoring of reserve assets using proof promises. So here what we can do is that we can use Chainlink proof of reserve for security, its reliability and its compatibility, and we can do this to verify that whatever off-chain assets and whatever the off-chain reserves which are holding or which are collateralizing our on-chain asset is reliable, is transparent, and everything is maintained in a good way. So this is a protocol which has been released by Chainlink itself. So we can just directly go into the diagrammatical representation of that. So here we have the off-chain asset vault. So we can consider this as the place where we are storing our gold in case of Paxos. Then all the information, the reserve information is being fed to the Chainlink network, and if any changes are made, like if any changes are brought about in the amount of the reserves which are being held in the vault, then it will be directly reflecting on the Chainlink network, and it will relay that information onto the on-chain smart contract, where it will show that whether the reserves have depleted, whether the reserves have increased. So as you can see here, the reserve decreased and it decreased on-chain as well, and then the reserves finished and it finished on-chain as well. So this is an overview of how proof of reserve works. Obviously we'll not be going through the actual technical implementation of that. We'll save that for the later sessions, and in the meanwhile I'll also, before we go on to our next session on Friday, I'd like like all you guys to go through 2 or 3 things. First, I'd like you guys to go through the Paxos Gold smart contracts and the protocol itself, try to understand what they are doing. Secondly, I would like you guys to go through the proof of reserve concept of Chainlink, how they are working, how they are implementing it, and yeah, and thirdly, I would like you guys to go through the oracles, the Chainlink oracles, how they work, and how are they used in smart contracts. How can we, extract real-time, real-world information, in a decentralized manner onto our smart contracts and onto our blockchain. So these are some things which I would like you guys to go across and go through before coming for the next session. So again, continuing with our key components and considerations in RWAs. So now let us now go through the whole process. Yeah, so this is a very important process, and this is a very important thing which we all should focus on, and I would like to grab your all attention here. So developing a real world asset on the blockchain involves several steps and considerations to ensure compliance, security, and efficiency. So first of all, what is the first step? Obviously it is defining the asset. Define the real world asset you want to tokenize on the blockchain. This could include real estate, commodities, art, as we had already mentioned. So first of all, define the asset for me. So for example, I say that I have this water bottle, and this is the asset which I've decided to bring on chain. Very vague and a very childish example, but yeah, let's, for the sake of the example, let's consider that this is the asset which I want to tokenize. So now comes the legal and the regulatory compliance. Understand the legal and the regulatory requirements for tokenizing the chosen asset. Depending on the jurisdiction and type of asset, you may need to comply with securities regulations, property laws, anti-money laundering regulations, and KYC requirements. Well, obviously, I cannot take anything which is like, I would say, if something, let's just say for example, something is illegal, so that is something which you cannot legalize on chain. Well, obviously you can bring it on chain, but the government and the regulatory and the legal compliance, we will not comply legally with the government policies and all. So that is something which we need to keep in mind. But for now, for my water bottle, obviously it is legal and we can get it on chain. Now is the third step, which is choose the blockchain platform. Uh, just a second. Okay. Yeah. Okay. So then we have to choose the blockchain platform. We have to select a suitable blockchain, and what we can do is that in this we can research and we can see what are the blockchains, what are their transactions per second, what are the gas fees associated with that particular blockchain, and how is the developer support for that blockchain. So accordingly we can choose a blockchain which suits us. And then we have the token standards. Now here we have to choose the token standard, what we have to choose, whether we can choose ERC20. If we have to take non-fungible tokens, we have to take ERC721. So let me just clear this out through an example. So let's just say in the example where I stood, or let's just take an example of the Paxos gold, the Pax gold. So each gold token or each gold token will not be different, right? Uh, each 1 kilogram of gold bar, another kilogram of gold bar, the value is the same, and they are not distinguishable. In the same way, if the real world assets are not distinguishable, in the same way, the tokenized form, on-chain tokenized form, will also be indistinguishable. So that is why here for the gold we can take ERC20 tokens, since they are fungible and we can transfer it, and they are not unique in their own way. Uh, for the other example, what we can say is that let's just say there is a new project which is tokenizing art projects of famous painters, and it's bringing the ownership of the art projects of the arts onto the on-chain assets. It's bringing the art into the on-chain asset. So here in this case, we can't use ERC20 tokens, but we have to use the ERC721 tokens, which is a non-fungible standard, because each artwork or each token is unique in itself. So it is something which is distinguishable and not the same. So here it comes. Here we have to choose whether we have to take the ERC20 tokens or whether we have to take the ERC721 tokens. Yeah. So then we have the collateralization. So this is a very important part when it comes to tokenizing RWAs, because you obviously cannot tokenize anything and just out of thin air. If I say that I'm going to tokenize like if I also say that I want to tokenize platinum, the precious metal platinum, and I want to create an on-chain token for platinum without having a backing or without having a collateral for the backing, which is backing the platinum. So that would be vague, and that would be a very stupendous decision, right? So for collateralization, many tokenized RWAs are backed by collateral, which could be the asset itself in the case of direct backing, or the other assets and financial instruments in case of indirect backing. So I'll come to this collateralization part later when we'll talk about the categorization of RWAs. But for now, yeah, collateralization is something which is backing our on-chain asset, and it could be direct backing, which is directly the token itself, like the asset itself, or it could be other assets as well. So we'll go through this in a better way later when we focus on the collateral, when we focus on the categorization part. And then we have the smart contract development. Obviously we need to develop smart contracts to represent and to manage the asset of the blockchain. We have to write all of the transfer rules, the token issuance rules, the ownership rights, and all the other functionalities which we want to incorporate into the tokenization process. And then, as I talked about the oracles and data feeds, we need to integrate oracles or data feeds to bridge the gap between the blockchain and the real world, because the only way to get real world information on chain in a decentralized way is oracles. So we have to use oracles for the data feeds and all. And then we have the tokenization process. Then we tokenize the asset by minting digital tokens on the blockchain. We can mint the tokens and then we can distribute it as we want. And then obviously the most important part comes the security and audits. And as you already know, for security and audits, QuillAudits is the best place which we can come for, and we can obviously audit all of your smart contracts on all of your protocols in the most secure way and in the most industry suited way. And then you have to obviously conduct security audits of smart contracts and overall system architecture to identify and mitigate potential vulnerabilities or attack vectors. So here we are done with the key components and considerations in RWAs. I'll just leave you with the process of RWAs, like the process of tokenization of RWAs, for just a few minutes, and I'll just be back in 2 minutes. So meanwhile you guys can go through the tokenization process. I'll just be back. Yeah. Okay. Hi guys, I'm back. And pardon me for my messy hair and my messy face in the morning. I'm I'm deeply sorry. So yeah, let's just start with the categorization process with of the RWAs. Okay. So till now, we have covered a lot of theory, and I guess you guys would have already had a good understanding of what are RWAs and what is the whole process of bringing RWAs onto the blockchain. So now let's look at the categorization of RWAs. So look at this diagram. We have RWAs, and there are three major properties and aspects of RWAs, which are asset location, the collateral location, and the backing type. So the asset location refers to the location of the asset which we are tokenizing. So for example, if I say this phone, so this phone is an off-chain asset which is in the real world and it is not on-chain. And if we come to the on-chain assets, well, for example, if I talk about the different well, what is a good, okay, we'll go through the examples, but yeah, on-chain asset is something which is already there on-chain, and we are tokenizing it again. So we are it refers to the tokenization process of an already present of an on-chain asset which is already present on the blockchain. So then we have the collateral location, where we come to know if the collateral is stored on-chain or off-chain. So an on-chain collateral example could be the example of I would say DAI, the DAI stable coin. We'll go through the DAI stable coin. We'll go through the how the DAI works, how the collateral and how the asset location works in DAI stable coin. But yeah, on DAI is one of the examples of the on-chain collateral system. And then for the off-chain collateral, we had an example like we read about Pax Gold, where the collateral and the back which collateral is stored on off-chain, which is the ounce of gold which is stored in vaults in London. So this is obviously an example of the off-chain collaterals. And then we have the backing type, if the backing is direct and or if the backing is synthetic indirect. So this refers to the, well, let me explain you this to an example. So direct backing, for the direct backing we can refer to like the Pax Gold, where the gold token is backed by actual gold itself. But in the, if we talk about the backing type of synthetic or indirect, here, yeah. So for the indirect, it could be something like the DAI coin again. So DAI is a stable coin which is which is pegged 1 to 1 with the value of the US dollar. But its backing is not in US dollars. First of all, it is on-chain backing, and again on-chain it is backed by Ethereum and other cryptocurrencies, which are not the tokenized asset itself. So this is an example of in synthetic or indirect backing, where the backing asset and the asset which we are tokenizing, they are not the same, and they are of different like they are different and they are not the same. So therefore, we have three major components, three major features, three major aspects of real world assets, and each has two subdivisions. So if we do the maths, we have 8 possible categories, which are on-chain asset, on-chain collateral, and direct backing. The same with synthetic backing, and then we have on-chain asset with off-chain collateral and direct backing and indirect backing. Then we have off-chain assets with the same categories, and this goes on. So we can tokenize real-world assets by combining any of the following traits: asset location, collateral location, backing type. So everything which I just told in the diagram, while explaining diagram, is written in a very clear and fundamental way here. So asset location refers to the location of the asset which is being tokenized. For example, real estate and gold are off-chain assets, whereas Bitcoin and Ethereum are on-chain assets. So you may have heard about wrapped Bitcoin and wrapped Ethereum, which is something which is done because Bitcoin is obviously not ERC20 compliant, and you would be shocked to know that the token, like the Ethereum token itself, which is which is native to Ethereum, is also not ERC20 compliant. So we have, let's go to wrapped ETH. Yeah, there it is. Yeah, so wrapped ETH is ETH where they are taking the Ethereum and they are getting it on to match with the ERC20 standard. So they are wrapping Ethereum with the ERC20 standard, and that is called wrapped ETH. So this can also be considered as an on-chain asset or a real-world asset. So here the assets are on-chain, and in the case of real estate and gold, the assets are off-chain. So then we have the collateral location, which refers to the location of the collateral. Again, for the example, we have Pax Gold is a digital token backed by physical gold, which is an option collateral as I had just mentioned, and the DAI stablecoin requires on-chain collateral, which is Ethereum and other coins. Then we have the backing type. Now the backing type refers to the type of the collateral backing the asset. Now there are two types of backing, which is direct backing and synthetic or indirect backing. So in direct backing, the collateral backing the asset is the same as the asset. So for example, if I come to Pax Gold again, so Pax Gold token is directly backed by gold itself. So here this is a case of direct backing. Similarly, USDC, which is the stable coin by the Circle Foundation, is also directly backed by the actual USD. So if you go on USDC website and if you do a little research on the USDC stablecoin, so for every USDC token which is minted on chain, they have direct backing with US dollar, which are stored in vaults and different bank accounts in the option world, in the real world. So this is something which is directly backed, and the assets are off chain, and the asset which you are tokenizing and the collateral which we are putting is also off chain. So this is a good example for direct backing. And then we come to synthetic and indirect backing. So in synthetic backing, collateral backing the asset is not the same as the asset. Again, we'll understand this through an example, which is DAI coin by MakerDAO is backed by on-chain collateral assets, which can consist of other crypto tokens but not USDT. This DAI is a stablecoin. So here, DAI is something which represents a US dollar, which is an off-chain asset, but the collateral is not. But the collateral, first of all, it is on-chain, and second of all, it is synthetic. Why it is on-chain? Because it is backed by cryptocurrencies and the crypto tokens, which are obviously on-chain assets. And secondly, uh, it is synthetic and indirect backing because we are tokenizing an USD, a US dollar, but the backing and the collateral is not in terms of US dollar, but instead it is in terms of crypto tokens. So yeah, here where it comes that this is indirect and synthetic backing. So since we have three categories, each with two options, we can have 8 different types of RWAs. Having 8 possible categories of RWAs doesn't necessarily mean that all of them have been implemented till now. So real world assets on blockchain are still a very naive and a very budding topic and a very budding concept which is being developed in the blockchain world right now. So right now the majorly 5 use categories in RWA tokenization are on-chain asset with on-chain asset with on-chain collateral and direct backing, on-chain asset with on-chain collateral and synthetic backing. Then we have the off-chain assets with off-chain collateral and direct backing and indirect backing. So first of all, let's just start with on-chain assets with on-chain collateral and direct or indirect backing. Just let me briefly check if the live stream is going well. Okay. So let us just go through the major categories of RWAs, and this would give a very like we'll also be going through the real world applications where they are being implemented. What are the projects which are based on these categories, and this will give you all of you guys a very good idea of what are the different types of RWAs and how what are the collaterals working and what is the how are the backings working. So we'll go through them right now. Okay. So the first category which we are going through is on-chain asset with on-chain collateral and direct backing. So wrapped ETH and wrapped Bitcoin are examples of on-chain assets which are directly or indirectly backed by on-chain collateral. So here everything is on-chain. The asset is on-chain, which is Ethereum and Bitcoin. The collateral is also on-chain, which is obviously the Ethereum and Bitcoin itself. And it is all we can see if it is directly backed or indirectly backed, which we'll see as we move forward. So wrapped ether, the native wrapped ether. So Ethereum is the native cryptocurrency of Ethereum, which doesn't conform to the ERC token standard, which is widely adopted standard for the Ethereum tokens. So this causes a compatibility issue with various dApps. So WETH or wrapped ETH was introduced as a solution to this problem, allowing Ethereum to be wrapped into an ERC20 compatible format. And to obtain WETH, users send Ethereum to a WETH smart contract, which locks the Ethereum and issues an equivalent amount of wrapped Ethereum in return. So you just go to the platform. Let's just say that I sent 1.056 Ethereum onto the platform. So I'll receive 1.056 amount of wrapped Ethereum, which whose value will be directly pegged one to one with the actual Ethereum token. So I just gave ETH to the platform, and they gave me wrapped ETH. So this is how the concept of on-chain collateral and direct backing comes into play in the case of wrapped Ethereum, because you're giving Ethereum, which is obviously the backing and the collateral, and you're getting WETH in return. And this process is reversible. Obviously, you can convert it back to Ethereum, and the value of the wrapped ether is directly backed by Ethereum at a 1-to-1 ratio, ensuring that each wrapped Ethereum token is always equivalent to one Ethereum, and the Ethereum is used as a collateral is held security in the smart contract. Okay, so now let's go for the wrapped Bitcoin. Now wrapped Bitcoin brings Bitcoin's liquidity to the Ethereum ecosystem. Again, it is the same thing. Bitcoin is obviously not ERC20 compliant, so we are wrapping Bitcoin. So we are bringing it Bitcoin onto the Ethereum standards, and we are wrapping it into an ERC20 standard. So here BTC Bitcoin is sent to a custodian, who then mints an equivalent amount of wrapped Bitcoin on Ethereum. This process is also reversible, allowing wrapped Bitcoin holders to redeem the tokens for Bitcoin. The value of wrapped Bitcoin is directly backed by Bitcoin with a 1-to-1 ratio, and each wrapped Bitcoin token represents one Bitcoin, and the corresponding Bitcoin is held by custodians of the Ethereum blockchain, but is managed through on-chain contracts and mechanisms for minting and burning WBTC. Okay, understood. So now we'll go on to the next category, which is off-chain asset with off-chain collateral and direct or indirect backing. So this is the, I would say, category which is the most in demand, and which is the most in talks and in discussions right now, because we are getting off-chain assets which are present on the real world, and we are also providing off-chain collateral for them, and then we are bringing them on-chain through indirect or direct backing. So USDT and USDC, which are the stable coins, fall into a unique category of RWAs, which are digital tokens representing fiat currencies like the US dollar on blockchain platforms. So these RWAs are characterized by their off-chain assets, which are fiat currencies, gold, stock shares, real estate, etc., and off-chain collateral with their value directly or indirectly backed by these reserves. So the technical framework for tokenizing such real-world assets which are present off-chain are, first of all, the smart contracts. We have to have the smart contracts because they are obviously the backbone of any tokenization platform, and we have to write all the codes and all the future agreements, the self-executing agreements. We have to write them through code on chain and on the smart contracts. Then we have the asset custody and verification. Now, it is essential to process. The essential to the process is ensuring that the real-world asset is securely held and verified. Whatever we are tokenizing, whatever we are bringing on chain, we need to ensure that the custody of the asset is in good hands and is safe hands, and we have full 100% trust on that custody, and also it is verified. And then we have to use oracles for real world data, because just as I talked about the example of tokenizing an Apple share on chain, where in such case the blockchain does not know what is the value of an Apple share in the US stock market, because a blockchain is very secure and very isolated from the real world. The blockchain has no idea what is happening on chain. So here comes into play the the importance of oracles, because we'll use oracles to get that real world data. What is the price of the Apple stock in the US stock market, and that will feed into the smart contract and will feed into the blockchain, and according to that we'll create protocols and we'll create functions which will then peg the value of the tokenized asset which we are creating to the price or to the value of the of the thing off chain. Yeah. So then we have regulatory compliance and legal framework, which we had discussed before, and then we have the token standard interoperability, which also we had discussed before. Now let's go through examples which are currently using this, which currently fall into this category, which is off-chain assets, off-chain collateral, and direct or indirect backing. So first one is gold, obviously. So tokenizing gold involves issuing digital tokens backed by physical gold stored in secure vaults. Each token represents a specific quantity of gold. Example, 1 gram. The physical gold acts as a collateral, and the token's value is directly tied to the gold price, offering investors exposure to gold without the need for physical possession. So here we can, as we can see, first of all the asset is gold, which is off-chain. Then we have a backing, which is physical gold itself, which is again off-chain. So the collateral is also off-chain, and the token is also off-chain, the asset is also off-chain. And then we have the backing type, which is directly back in the case of Paxos gold, because it is directly backed by the gold itself. So as we have already gone through the Paxos gold website, I would also encourage you guys to go through the Paxos global smart contract. You can go to the implementation itself, and you can see that how it works. Well, this is obviously a lot to digest at once, but yeah, you can just look at the basic structure and the framework of the smart contract, that how they are implementing something off chain and bringing it on chain. And coming back to our topic, so then we have real estate. Real estate tokenization breaks down property ownership in digital tokens, which we had already talked about before. So if I go on to this website which I have mentioned in the repo itself, so here we will be redirected to a Alchemy article where they have listed 6 real estate RWAs project which are very prominent right now. So one of them is Parcel, Citadel, Honeybricks, Tangible, Fabrica, and Y24. So you can go through this article, as I've already mentioned it in the repository. You can go through them. You can visit the websites, how they are working, and what is the driving factor, and what are the protocol, and what are the functions which they are using. And then we have the stock market shares, which is tokenizing stock shares involves creating digital tokens that represent ownership of company stock. And this is something which not only will be looking into theoretically, but will be also looking into practically. We'll be coding a smart contract. So in the next session we'll have a live code with me or build with me live session where we'll be writing smart contracts. Like we'll be creating a project out of scratch. How to start? We'll be installing the packages together. We'll be using the oracles together, and we'll build a smart contract. We'll write its tests that we'll write various first tests, and we'll also look into the security aspect of that, and we'll also write the deployment scripts. So it would be a very very fun, intriguing, and very valuable session. So yeah, and again, before moving on to the next category, I would like to motivate you guys and invite you guys to the next session, because that is where will actually learn how we are implementing something. Like we discussed all of the theory, right? How we are taking this, how we are considering the off-chain assets and the collaterals and the backing types. So now we'll getting this all, and we'll be implementing this all into code itself, and we'll be looking into that, and I'll be explaining the project which I will be pursuing in the next live session in a bit. And before that, let us look at another category, which is off-chain asset. So the asset which we are tokenizing is off-chain, and with on-chain collateral. So here the collateral is not off-chain, like in the example of gold, in the example of Paxos gold, the asset was off-chain, but the collateral was also off-chain. But in this case, and why was the collateral off-chain in the case of Paxos gold? Because it was backed by physical gold stored in London, vaults in London, right? So that is off-chain asset. So right now in this category, we are talking about on-chain collaterals, where the asset is off-chain, but the collateral is on-chain. And then we have indirect backing. So the DAI stablecoin is a notable example of an off-chain asset with on-chain collateral. Why it is an off-chain asset? Because it is representing a US dollar, and which is an off-chain asset. And then we have on-chain collateral and indirect backing, primarily because its value is pegged to the US dollar and off-chain asset, while its collateral consists of various cryptocurrencies stored on-chain within the MakerDAO system. So right now we'll go through the DAI and the MakerDAO website itself. Before that, this setup represents an indirect backing because the value of DAI is stabilized against the US dollar through smart contracts and collateralized depositions, rather than a direct one-to-one reserve of dollars. So, if when would have this example been directly backed? When the backing was also in terms of US dollars itself. But as we have already mentioned that the collateral is on chain, and US dollar is a off chain asset and is an off chain collateral. So here in this case, the chance of getting a direct backing is zero, and we only have to use indirect backing in this case. So let us just go to the DAI stablecoin website. Okay, and here it is. Just a second. Okay, okay, we are back again. So yeah, let's just close this. Yeah. So here we have entered the MakerDAO website, where we can read about the DAI stablecoin. So DAI is a stable, decentralized currency that does not discriminate. Okay, uh, let me go to the yeah the white paper, and then we'll go to the DAI stablecoin, and we'll read about that. Yeah. So here the DAI stablecoin is a decentralized, unbiased, collateral-backed cryptocurrency soft pegged to the US dollar. DAI is held in cryptocurrency wallets or within platforms and is supported on Ethereum and other popular blockchains. So DAI is easy to generate, access and use. Users generate DAI by depositing collateral assets into maker vaults within the maker protocol. This is how DAI is entered into circulation and how users gain access to liquidity. So every DAI in circulation, so this is where the important part is, every DAI in circulation is directly backed by excess collateral, meaning that the value of the collateral is higher than the value of the DAI debt, and all DAI transactions are publicly viewable on the Ethereum blockchain. So, and here when we come to the collateral assets, DAI is generated, backed and kept stable through collateral assets that are deposited in the maker vaults on the maker protocol. So if you want to, and to generate DAI, the maker protocol accepts as collateral any Ethereum based asset that has been approved by the MKR holders. Right. So coming back to our repo, so here as we read in the DAI stablecoin that DAI is an option asset, and for its backing and for the collateral we can directly go onto the maker DAO system. We can deposit any amount of any token which is Ethereum compliant and which is mentioned in the maker DAO system. We can deposit that token, and for the equivalent amount we can take and we can swap it for the DAI token for an equivalent amount. So if we had just for example, if we had deposited $400 worth of Ethereum or $400 worth of Polygon onto the platform, then we can take out $400 worth of DAI from the platform itself. And then so we are done with all the categories, we are done with all the theories, we are done with the let's just go through a brief overview of what we all covered. So we understood what are real world assets on blockchain. We went through the types of RWAs, what are the different types of RWAs. Then we looked at the key components and considerations and the main process, how we have, what are the steps which we should take, and what are the important concepts which are required in the whole tokenization process of RWAs. Then we have categorization of RWAs. We talked about the categorization of RWAs. What are the different components of RWAs? How are they distributed and how are they divided into onto themselves? And then we looked at the different possible categories. We looked at the asset location, the collateral location, the backing type, their examples, their definitions, and then we look at the 5 majorly used categories, which is on-chain asset with on-chain collateral and direct backing and indirect backing. So that makes 2 of that. Then we have off-chain asset with off-chain collateral and direct and indirect backing, which again makes 2 of that. And we look at the various examples, which is gold, real estate and stock market shares. And then we looked at the off-chain asset with off-chain collateral and indirect backing. So in the next session we'll going through this process of tokenizing an Apple share. So what we'll do is that we'll be diving deep into the technicalities of tokenization of real world assets by developing an Apple coin. So we have called that Apple coin, you can call it whatever you want, and which is an ERC20 token where the value of each Apple token will be pegged, one-to-one pegged with the real-time value of an Apple share in the US stock market. So the backing collateral will be wrapped Ethereum, which is again an on-chain collateral and indirectly backed. Why is it on-chain collateral? Obviously because wrapped Ethereum is an on-chain asset. And why is it indirectly backed? It is indirectly backed because the asset which we are tokenizing is an Apple share. So we can and the backing is wrapped Ethereum. So since both are not the same, so that is why this is indirectly backing, or we can call it synthetically backed. So we'll go through this whole process, what are the different functions we are using, and how we are pegging and how we are maintaining the one-to-one value. Then we'll go through everything. We'll be building everything from scratch. So if you want, you can go through the smart contract itself before coming on to the next session. Like you can have a brief idea of how the smart contract is working, go through the contract, understand the different functions of it, and then in the next session obviously I'll be there to help you guys understand it better. and we can have a code along session where we can write the code itself. And right now if we go on to the text section, there are right now no tests involved. I have written no tests for the smart contract for now, because this is something which I wanted to do right now, which I wanted to do wanted to do live during the live session itself. So we'll also be writing first tests and different tests for the smart contract which we have written in the live session in the next session. So I hope you all tune in for that. And this was all for this session. I hope you guys had a good time understanding and going through RWAs. If you guys face any problem, or if you guys are anyone is unable to understand a single thing from this whole repository, or in general anything about real world assets or their tokenization process, you can ping me up on Twitter. My Twitter is Prathmesh R14, Prathmesh R14, or you can ping me on LinkedIn, and or you can directly just go onto the comment section and ask your questions there. Ask the questions there, and I'll be more than happy to answer and resolve your issues and your doubts. So thank you everyone. That's all from my side today. Hope to see you all next Friday for the next session, for the next live coding session. So until then, bye bye, good night, bye bye, have a good night, and thank you.